This week I was able to make a $2,000 profit with a 40% win rate, and my average loss was around $200, which is like my average risk, and my average winner was just shy of $700. So, I was really keeping my risk tight and maximizing on winners, and I was able to do so by just trading supply and demand with order flow. I don't trade any other concepts, no ICT, no smart money concepts, or whatever other strategy there is out there. I just simply just focus on supply and demand and order flow. That's it. And you guys can see Monday and Tuesday were both red days for me, small red days. Break even day on Wednesday, and I had a pretty good day on Thursday and Friday. So these days I was really just able to catch some nice winners, and throughout Monday to Wednesday I was really just minimizing risk and being aware of what kind of market that we were in. And like this just goes to show you that you need to be able to keep your wrist tight and just continue to follow your plan. So yeah, I'll be getting right into the recaps, going over the trades that I took on Thursday and Friday. All right, y'all. So for Thursday, I took a trade, pretty nice winner. I believe this was around a 5.8 RR trade. But the context of this trade was we were just trading near the all-time highs, and I was mainly looking to take longs just because of how bullish we were. I was not really looking for a short unless we broke this demand level down here. But the context of this trade is we're just trading at the all-time highs, and we were selling off into yesterday's low. And I wanted to see if there were buyers stepping in here or sellers that were getting trapped to potentially take long back up to the psychological level of 6,500. But that was just the context of this trade. And the location was the previous day low. Here I marked it out as yesterday's low day. I believe it was just a low that was created before the market closed, or like a London low or Asia low. It wasn't necessarily like a low that I seen on a daily chart. It was just pretty obvious on the 30 minutes. So I had marked it out because I had no other levels until this higher time frame demand, which was below. So that was the location of my trade, and the confirmations, which I'm gonna go through in detail, were just trap sellers, B-shaped defending, and buyers taking control. And as I go through the trade from Thursday and Friday, you guys will notice that there are very many similar things as far as like what I look for in my confirmations. It's very, very repeatable. It's like the same pattern over and over. And I was just able to build, a lot of intuition and repetition by just taking the same thing over and over and over. And even when I lose, I just kind of, show up the next day, and if I see, I just take it, right? Because I'm just confident in the type of trades that I take because of the work that I put in over time. But I don't want to get too carried away with psychology and stuff, but these were the main confirmations that I seen to get me into the trade. And as you guys know, I always need context, location, and confirmation to then take a trade. I do not trade if one of these is not in the equation. Like if I have context and location, but I have no confirmation, I simply have to sit on my hands. So yeah, that's just a quick tip right there. But yeah, let's just get straight into it. So when I had seen price come down into my demand level, I noticed that we created a B shape here, and there were some trap sellers here at the low of this footprint bar that had pushed price back up. So when we had trapped these sellers that pushed back up, I then observed the retest of this B shape, and on this retest I seen a lot of illiquidity in this footprint and also in this footprint. And what that means is I was just watching the speed of the footprints, and I noticed every time we came down and we tested it, we shot right back up with speed. And it showed me that price didn't want to be at these lower prices, right? And also, to kind of keep things in mind, there was also some positive delta here while we're dipping into this B-shaped area. And also, we see a lot of selling volume here, which is showing me that these sellers are trapped. So again, I'm gonna start from what I seen first. Was I seen the B shape here, I seen the price push up, where I seen us retesting this area, and I seen illiquidity here, and then on the third test I seen a lot of selling volume step into the market, and we pushed up quickly above this trap selling, and this is exactly where I trigger my long at the 89s right here, with my stop right here at the 86s. So I have my stop loss here and my entry right here, targeting the break of the 6500s. So this is what I seen on footprints. It was basically just trap selling. I'm gonna go over it one more time. It was trap selling at the low, buyers pushed it up, came down to test this trap selling or B shape, and on that retest we had illiquidity and a lack of follow through from these trap sellers, right? And that is just where I trigger my long. So I really like these kind of setups on the footprints. It's like a B shape. Like on the initial test, we have a B shape. Then we go up, and we come down to retest this B shape. And then coincidentally, we have another B shape while retesting this B shape. But it's very, very important to not just look for these B shapes. Like you have to understand what is going on, like the volume and the interaction between buyers and sellers. So there were a lot of clues off of this footprint chart that had got me into my long position. And while I was seeing all these things here on the footprints, if I go over to book maps, I see the same exact thing. So I've seen a lot of selling volume stepping into the market, into my demand, or into yesterday's low. And as you can see, there's an increase in the sell volume here as we're testing yesterday's low. On top of that, you see all this selling volume here, large selling bubbles here as well. And despite all this large selling, we had pushed price up. Buyers had pushed price up, which told me that these sellers here were trapped and buyers were starting to take control, right? So once I seen that the sellers are trapped and buyers were taking control, I observed to see if we were going to come back and retest this trap selling that I seen here. And as you can see, we seen weaker selling here, and then buyers stepped in again. And on the third test, I seen a lot of selling volume here with no follow through to the downside. Specifically this selling volume here, I'm gonna circle it right here. So I seen this step in with no follow through to the downside, and then I seen buyers like starting to come in again. And right here at the 89s is where I trigger my long. And as you can see, if I go back to the footprints, you see the same exact information. It's like an increase in sell volume with a lack of follow through when we're retesting these trap sellers here. And while I was watching this on the footprints, I seen the same exact thing on book maps. And as you can see on a candlestick chart, I entered right here at the 89s, or I got 89.50, and I targeted a strong break of the 6500s, and I actually got out right at 6504. So I kind of got out on the weakness. Obviously in hindsight, it looks like I top ticked this entry, but really I was just watching the footprints, the book maps, to see the first sign of weakness after we broke the 6500 level. So once again, you have to make sure that you have the context, location, and confirmation to get you into the trade. The context and location is pretty simple, but as far as like being able to see everything that I explained on the footprints as well as book maps simultaneously really does take a lot of screen time and understanding the concepts of order flow and just what's going on in the market between buyers and sellers. So that's my trade for Thursday. Now, moving on to Friday, I took a nice trade here as well. I believe this was close to a 3.3 RR, if I'm not mistaken. I had 3 points worth of risk, I believe, or it was around 2.5, if I remember. I have to check my Discord again, but it was around like 2 to 2.5 points of risk with a 10-point reward. So on this trade, the context of this trade was on Friday, we really had a strong drop down, and price was kind of bleeding down to the downside, and it looked very weak. But I noticed if this demand here can hold, I will look to take longs just for a temporary pullback, just to the nearest high. And yeah, so the context was the S&P was selling down really hard into this demand level, and I was just looking to see if buyers would show up to see if we could get a quick pullback. And the location of this trade was a 1 hour demand level, as you can see here, and also it was a previous low as well. So the location is actually a 1 hour demand level and a previous low, and on top of that, it was a low a day fake out. So just to make the context even better, we were having a low a day sweep, liquidity sweep, or stop hunt, whatever you guys want to call it. At the same time, we were in a demand level, and we were testing a previous low at the 59s. So it's a lot of context here, a lot of location, and the confirmation, the same thing. Same thing as Friday. Trap seller, buyers to control, and there's a B shape just for extra confluence. So on the footprints, as we were selling down into this demand level, I seen a lot of selling just bleeding down, and then I seen some weaker selling here, and a large delta step in here, 318 delta. And I seen this had pushed price up, and when we pushed price up, we came down here and kind of tested this area with illiquidity. I seen this buyer here step in, and I immediately got long on this footprint right at the 61s. And had my stop loss at the low of this footprint, pretty tight stop loss. I believe it was like 2.5 points of stop loss. And yeah, that's basically just what I seen on the footprints. I seen a lot of selling died out here, got exhausted, large delta stepped in, pushed price up, retested this delta with weaker selling, and then buyers taking control again, and that's exactly where I got long. All right, so going on to book maps, I seen a lot of selling down into this demand, and I seen large selling volume here at the level of demand. And as you can see, there was literally no follow through to the downside. Instead, we got all this selling here. Then we actually pushed price up. So this showed me that these sellers here were trapped, and then buyers started to take control when we pushed up. Now, after seeing that the large selling volume got trapped and buyers took control, we retested this box that I have drawn out here, which was basically just trapped sellers. And when we retested this, I seen weaker selling here. Then I seen abnormal large selling volume step in right here. Now, despite this large selling here, price started to push up, and this is where I got long. Now, on top of this, there was a bid getting filled right here. I don't know if you guys can see it, but let me see if I can change this. There was a bid getting filled right here. So when this bid got filled, then I seen this large selling volume with a lack of follow through. I then got long right at the 61s, right? Tight stop loss right under the seller. And it turned out to be a very, very nice trade. So that's basically all I seen on footprints and book maps. As you guys can see, my confirmations is very, very repeatable, and my context and location is like damn near the same thing every time. It's either a previous low, a support area, or like supply and demand. I mainly really like using supply and demand, and for Friday's trade, it was both. I mean, there was a previous low, higher time frame low. It was a low day stop hunt and a demand level too. So everything from the context, location to the confirmation are all things that are repeatable every single day. It's just something that I've built over time, just continue to sharpen. And one thing that I heard was consistency comes from repeatability, just the ability to repeat the same trade over and over and over. Just like over time, you're going to start to create consistency in your trading and really see your equity curve go up. And that also means that you need to be managing your risk very, very tight and just executing your plan and sticking to, high quality trades. So, and if you guys can like, comment, and subscribe on this video, it would definitely help me a lot. I would love to put out more, trading content and just provide any value to you guys. So if you guys could let me know if it helped, or, just like any other videos you guys want to see, just, drop a comment, like the video, and I'll be seeing you guys soon.